Sticking with the consumer, Instacart reporting a top and bottom line beat alongside solid Q4 guidance. Shares initially spiking on the report, but pairing gains after the call. Let's bring in Bernie McTernan, senior analyst at Needham and Company. He's got a buy rating on the stock. What did we learn from Instacart, Bernie?
Yeah, I mean, I think the most important thing is that October trends were really strong, and that drove the company to have a double-digit guide for GTV at the midpoint. Over the past 4 quarters, they've only guided to a 9%. So I know we're just talking about 100 basis points, but I think that is a strong signal, just considering sentiment on the stock, whether it's competition fears from Amazon, losing exclusivity with Kroger. I think the guide was really strong.
So, who is their primary customer in terms of income level, just based on the conversation we were just having?
Yeah, no, it's family. So still 75% of their GTV is these large baskets, and that's where they're best in class. And one of the things that the company was speaking a lot about, and it was Chris Rogers, their new CEO's his first earnings call, and it really seems this enterprise product is going to be a significant focus for the company, and that's getting them greater learnings about what's in store, what's in inventory, and all that should drive a better product. Again, helping for these big shops, but also too they are moving down market too, and with Instacart Plus having $10 minimum delivery, so that was also helpful in the quarter as well from an orders perspective.
I mean, if the business is healthy, why has the stock been such a disappointment? You have a $66 price target. It's almost double of where the stock is right now. It's lost, I don't know, almost 30% in the last 3 months, and been a disappointment overall for the year.
Yeah, and it's like I mentioned earlier, competition concerns. So to me, you have a stock that's trading about 7 times EBITDA. Next year, we have high single-digit GTV growth. We have mid-teens EBITDA growth, and we think that for the financial profile, that stock's just too cheap. And so for the bears, at least, again, what they're playing for is competition. So Amazon losing Kroger exclusivity. So it wasn't necessarily the quarter where we thought we would feel that pain. But we think that if we're right about where our numbers are, and Instacart has been more resilient from prior activity from Amazon in this space, the stock's really going to work because the multiple is just too cheap. And then the company also put in a $250 million ASR, accelerated share repurchase, and also increased the buyback by $1.5 billion. So I think the company is also looking to take advantage of these depressed trading levels too.
Okay, so you're doubling down on the thesis, Bernie. You also cover a number of other of these discretionary stocks, Lyft and Uber and eBay and Etsy. Generally speaking, how are you feeling about the consumer since post results?
Yeah, no, I mean, look, the consumer's been, I think, a lot better than feared, especially over the past 2 quarters. You're really seeing improvement. And one of the interesting things that all these companies are starting to talk about now, and we just had that AI conversation, but it's AI products to drive conversion. So that was a huge theme that we saw this past quarter in our e-commerce coverage. You have Etsy talking about it with their integration with OpenAI and instant commerce. eBay helping to drive their focus categories. Those continue to accelerate. And so I think that we're starting to get some of the consumer benefits of what we talk about every day, which is AI.
Well, that's good to hear for them. Bernie, thank you for joining us.
Thanks for having me.
Some of these consumer names. Bernie McTernan from Needham.